this guy, CZ, he's the, and I told you we'd get to China eventually.
Yeah.
But so FTX was the second largest crypto exchange in the world. First in the world was Binance.
Mm-hmm.
And Binance is run by this guy, CZ. When FTX first started, Bankman-Fried and CZ were actually friends. The Binance was the first largest investor in FTX and actually bought 20% of FTX. Yep, there he is. And what that investment did was it was all in FTT, but it made Binance invested in FTX using the funny money of that FTX came up with. After there was a CoinDesk article that came out that said Alameda Research's entire balance sheet was the FTT, as we talked about. They're parading around like they had this equity, but it's all funny money. So CZ saw this and was like, okay, the house of cards is about to fall.
Mm-hmm.
I hold $2 billion in FTT that came from the initial investment. And he's like, you know what? We're done with this. He dumped his entire portfolio of FTT on the market at once. That's this text.
There it is right there.
November 6th.
That's a tweet right there. That's the actual one that he sent.
As part of Binance's exit from FTX equity last year, and I want to talk about this for a second. Binance received roughly $2.1 billion US dollar equivalent in cash. Due to recent revelations that have come to light, we have decided to liquidate any remaining FTT in our books. All right. So when this happens in the market, okay, there are guys that are in the stock market. There are guys that are market makers. So I was a NASDAQ market maker. And you may be trading a stock, and they'll say a stock has support or resistance. And what that means is that there are traders who are supporting the stock and buying the stock at a certain price. And the resistance means there are traders who are selling the stock at a certain price. That's how the NASDAQ regulated market works. So you may be trading a stock. I used to trade this stock, Terra, and we would say, all right, maybe there'd be 4 or 5 guys willing to buy stock on the bid all day. You sit there and you're buying fucking stock. If someone comes in and pounds the market, they're like, fuck Terra. We're going to sell 100,000 shares of Terra. And maybe your appetite is 5,000 shares. You're going to buy your 5,000 shares. You're going to move out of the way and you're going to create another support level. That doesn't exist with FTX. So if someone dumps like $2 billion of a stock on the market, or in this case, this token on the market, there's no market.
Yeah, but there wasn't even cash for that. I don't even know where the cash came from that.
But there's nobody willing to buy it.
According to the numbers, there's not even $1 billion in cash. Is that correct?
Yeah.
Wait, say that again.
Is it true that they only had like up to about $1 billion or $2 billion in cash, real funds? Like they really were worth about
$1 billion
access or receipts to track, because people paid real money into the company.
Sure.
That's how they know how much money went into the company. They know that at the end of the day, they played games with it and they bought houses and it's worth zero now. But the cash is only a small percentage of what they said they were, because
about
they were
10%,
it by doing the cost of the made up token was their equity.
So that's where the real fraud comes in, right? So yeah, this guy Bankman-Fried is running around saying that I'm worth $5 billion or whatever. And during the bankruptcy filings, it was shown that like his $5 billion self-worth estimate was based on a portfolio filled with all these different cryptocurrencies. Turns out his real value was like shy of $1 million. Like it was nothing to what he was saying. But where the real fraud comes in is that he was using this quote unquote equity in the funny money to turn it into real money and then go around buying like $300 million worth of property in the Bahamas.
Right.
And Rob was pulling up that Cold Fusion video, and it shows in that video that like there was this like marketing ploy that Bankman-Fried did, where he's like, he's just this guy who just drives a Prius. He's this, like,
he did the whole I drive a crappy Toyota car.
I never want a guy, if I'm going to give him money, to drive a fucking Prius. I want a guy that's flying home in a helicopter playing Flight of the Valkyries over Long Island. That's the guy I want to give money to. And I think what happens here is that there is no market. and there's no market for FTX or FTT. FTX was, if he stuck to what he knew, what he was doing.
No one would invest money in this company, by the way.
No,
sorry, but no one's investing money like
no one should. No one should.
But no one should have. But people did, right? And what he is a great salesman. But people don't. All right, and I'll relate this back to the construction industry for a second. When a guy first comes, I'm in the construction industry. When a guy first comes to you for a job, he doesn't know anything. He could graduate from tech school. He could have a master's degree from Rutgers. He doesn't know shit because he has no real life experience. He has to build on that knowledge. These guys had no true real life experience. No one said to them, no. No one said, you don't know what he could have all these monitors and do all this bullshit and do whatever, but he may know what he's doing, but he doesn't know what he is doing. And the problem is no one wanted to say no to this man. And his girlfriend also, because it was cool to invest in there. Tom Brady,
but he was like the darling daddy of crypto. He was like the poster child for what the future is going to be with crypto. That was the whole thing.
Bullshit.
They put him on a cover of Fortune and Inc. And he's on every commercial. He's got the most popular couple in the world, Tom Brady and Gisele Bunsen, have their whole investment in FTX, which means they were paid in nothing.
Yeah, So zero. The psychological side of the scam is amazing to me because he was really able to fool Wall Street. And this is sort of my synthesis of what happened. But like he was able to fool Wall Street because he's like dealing in this cryptocurrency exchange, which is so foreign to like the traditional Wall Street guys that the Wall Street guys are like, oh, so you know what you're doing, right? And the banker's like, yeah, of course I know what I'm doing. Right. Like, okay, fine. Here's your money. You take all my money. I'm not going to ask any questions. You do what you need to do.
And he used his parents' good name, and his parents were in that group, and he used his parents' good name, and they said, oh, this is Sam. Oh, this is so-and-so's son. He probably does know what he's doing. You know what I mean? What he's caused is chaos in the legitimate Bitcoin market. Or the legitimate crypto market, which Rob is showing here. Because people don't know the difference between the two things. And I think that's what really, really makes this You
got to listen to her, Ray.
All right, this is it. Real quick.
You got to listen to her.
Rob,
if you want to never have sex again, you should listen to this.
No. I'm glad you found this because she says something that is so dangerous for a trader.
The elementary mathematics thing. Yeah, that's
put that on there because I want to talk about
customer funds from here to over here. And to make things worse, some of the things that Caroline said in interviews
she's kind of hot, though. I know you don't want to hear that, but there's some hotness.
Yeah, absolutely.
Ray, we need to have a conversation.
Use very little conversation offline. Use a lot of elementary school math. Being comfortable with risk is very important. We tend not to have things like stop losses. I think those aren't necessarily a great risk management tool. I'm trying to think of a good example of a trade where I've lost a ton of money.
Yeah, how about your whole company?
Well, I don't know. I probably don't want to go into specifics too much about
that. All right, so real quick, in that conversation, the thing that she says, if you're an equity trader or in any, whether it's equity or you trade in grain or you trade in whatever, we always use stop loss orders. You have to. It's how you protect yourself.
If you have a real asset,
if you have a
company worth losing its money for, this guy had a platform of just built up equity that no one ever asked. Can I see an example of this equity, please? Can I actually see a bank holding that has this money somewhere? And the issue is it doesn't have it.
If your head trader goes on, I don't know what the fuck show that was, sitting on somebody's couch. She looks like Velma from Scooby-Doo, and I don't, but I would never allow that if I was in charge of that company, first of all. Second of all, it's terrifying when someone doesn't she goes, well, I don't think that's really a good method to stop loss. It's called a stop loss order. That stops loss. That's where you're at. That helps you to prevent markets from crashing, from your holdings from crashing. And you trade with stop loss orders. All traders do. all traders have points of resistance and points of where they say, this is where I'm going to support. This is my stop loss. I'm done at this number. This is the number that I'm done at. How do you not have that?
What's so interesting about this whole thing, and again, the psychology of this is very interesting, is the fact that they had such an appetite for risk because they knew they were playing with funny money. Caroline Ellison didn't care if she lost all that money because she's like, well, everything's up in the air. It's all crypto. We're kind of giving it
very fluid. Everything's very fluid, very dynamic.
There's literally no moral hazard here. On Wall Street, the reason why you can't trade customer funds, you can't invest customer funds without them knowing, is because you can't gamble someone else's money. There's got to be a risk to gambling the money. And when you're completely detached from that, yeah, she can make trades and be like, I don't know what's the biggest loss I've had.
But the stock trader, the point is, the stock trader works for a company, Merrill Lynch or whatever the company might be, that has billions of dollars of global assets that could be seized in the event that they made up a plan to steal your money.
Huge
you eventually, in theory, be able to someday get some or all of your money back. That's the whole idea of, I give you my money, and there's always the threat, if you do the wrong thing, I'm going to come to you and take it legally from you when you do the wrong thing by me, right? I mean, that's really... But this guy had none of that. He had none of that. He didn't have to worry about any of that because there's no liability because there really is nothing.
And also FDIC insurance, SEC coverage, none of that applies to cryptocurrency asset exchanges. Part of this story is like Bankman-Fried was lobbying to get certain sorts of regulations, and everyone's like, oh, look at this CEO. He's trying to regulate his own industry. Turns out all he was trying to do was create a favored status for himself and his company to the exclusion of CZ and Binance, foreign exchanges, Chinese exchanges. And that's kind of the reason why CZ went against FTX in that string of tweets that you were showing later on. So CZ says that he's dumping all FTT assets onto the market, which effectively is going to create a bank run. Caroline Ellison gets onto Twitter and is like, listen, if you're dumping them, at that time, FTT was trading, I don't know, $27, $28. She's like, listen, if you're dumping them, I'm going to come buy them from you for $22, $22 on the token. CZ's like, no, I'm not going to do that. And the reason he didn't do it, he put it in his tweet. He's like, because you guys are against industry partners. You guys are not. You were advocating for regulations that would hurt other industry partners. So it was just like a personal spite between them. And then CZ's like, you know what? I'm done with this. And that one tweet led to the entire collapse of the house of cards.
Now, what liability does Binance have in this? Not so much legal liability, but what liability? Because really, he created this run. If he didn't do what he did, with this podcast would be about something totally different.
He bought the coin. He bought the coin with his real money, real money, like his real money from his other company, his real money, allegedly.
Right.
But Rob, let me ask you this. Why? Why did he say all of a sudden?
Because how do you want to get rid of your competition? He was one step away from.
Thank you.
One step away from. He was $36 million advance payment away from being the most popular within the next 2 years, the most popular crypto guru on the planet that could have said, CZ, bye-bye, you're gone now. We're going to get rid of you. We don't like what you're doing over here. That's why
what
they
does
pulled the plug on him.
do? What does Binance do? Binance
pulls the plug out.
Yeah.
Exactly.
They wagered, that was a $2.2 billion wager that was going to happen. Right.
Yeah. And how smart was he, though? How smart was
he? Obviously knew the house money. He knew the rules on the house money for sure.
So Ray, the smart thing. So there's a great Vox article that Bankman-Fried did an interview. So the collapse happened November 11th, 12th, something like that. That weekend, Bankman-Fried off in the Bahamas, doing whatever the hell it is he does, did an interview through Twitter DMs with a Vox reporter. And in that interview, he was so frank and so open with it. It blows your mind. The interviewer asked him well, you were considered the Warren Buffett of crypto. You were all about altruistic entrepreneurship and helping everyone out. He answers with one word, H-E-H. He's like, yeah, exactly. Yeah, just PR, F the regulators. So he really makes clear that all of this was a charade. All of this was like, just whoever wins, that person is right. And he says in this interview that, like, I'm not the only one. All of the corporations are doing this. That as long as you are the one who is holding the bag at the end when the music stops, then you're right. And whatever you did is justified. And I think this is such a toxic mentality. It lets them in their head, and it extends to the Elon Musks of the world and all the other people. In their head, they think all the ridiculous things they're doing, all the risks that they're taking are justified because they know they're on the side of the angels. As long as they win and their worldview succeeds, then everything is okay.
But can you imagine CZ had that much money that he was able to put $2.2 billion into token of another company just in the event that he has the opportunity to cut out the legs of somebody? And of course, we know starting at, it was $2,000 or $3,000 at one point, and it was up to 60,000, right? What was the height of crypto?
Oh, you're talking about Bitcoin?
The highest price.
It's about Bitcoin, right?
64.
Bitcoin.
Okay.
Bitcoin.
So it was spent as low as 2 or 4, and as high as 64. And now it's, near the mid third of that area.
Yeah,
but
I think it's 16,
just amazing that company was able to buy $2.2 billion of that other company's product, which they probably knew, by the way, was fake. Yeah, and probably could have made a claim against them if they really needed to.
But think of the balls of the guy of CZ from Binance. Think of the foresight that man had to say, I'm going to lock Sam Bankman-Fried up by, like you said earlier in the podcast, you said you don't let your competitor in the back door buying a fucking position in the company. And so now he owns, but Bankman-Fried needs the money. So he takes the $2 billion from Binance. Now Binance owns a position. What Bankman-Fried should have said was, dude, I'm never going to be number one. You can always be number one. Sometimes it's better to not be number one. Sometimes it's okay to be number two and go about your fucking business. Sometimes it is. But this guy, you see this shit? And I can tell you from personal experience that this is how you get in trouble.
That's the toxicity, though, of this mentality. Like, you're saying that just accept the fact that you'll be second. Someone like that, someone who's so narcissistic and is so certain of their own wisdom, is never going to be okay with being second place. So even after this collapse happened, and in that Vox interview that Rob was showing,
hit pause there for a second, too. I'm sorry. Hit pause on that, because there's a big thing with.
We'll go back. It's
I want to go back to it. I want to talk about who's
the
who
SEC
with
chair.
the mother, with the idiot's girlfriend. Go ahead.
That penny is yet to drop. By the way, the SEC chairman and stuff. We'll see how that goes. But yeah, so it's just it blows my mind the way that, like, he was so certain of the way he was going about his business, that to accept to be second place for him is impossible. It would never happen. So in the Vox interview, he's just like, if they just gave me one more week, I would have gotten all the money back. I feel like I'm listening to like a gambler who just needs to push.
It is a gambler. That's right. It's exactly what a gambler is. It's exactly what it does. It rationalizes the irrational.
And let's talk about who his CEO is, Sam Trabucco, who's a professional gambler, a professional blackjack player, banned from multiple casinos. I mean, that's the mentality.
This high-risk guys hang with high-risk guys.
Absolutely.
Exactly.
Gamblers are also probably the best stock traders as well, because there's a science behind it.
There's guys who know how to play cards. There's guys who know how to count cards. We've all watched the MIT movie. I know guys like that from a past life, that they're professional card counters, they're professional gamblers, but those guys, it's always like tomorrow. They might win $30,000-$40,000 today, and then they're always like, man, I'm gonna get it tomorrow. You know what I mean? And those guys, they always have that feeling, and they always feel that way. But this guy did it on a large scale, and he did it very publicly, and he did it very publicly.